Dmitry, we last posted a video talking about Tether, comparing the price of Bitcoin to Tether's market cap. And subsequently to then, there's been some other information coming out, from Jesse Powell as well, the CEO of Kraken. You had some opinions and thoughts on. Would you mind to take us through that today on this call?
Yes, sure. Thank you, Sean. Kraken's CEO, Jesse Powell, has given an interview to Forbes on the subject, and he made a few points on this. So the main point he's making is that there is no manipulation, but rather this is the retail demand which is driving the price. And also he said that Tether is not that big in comparison to the Bitcoin market cap. So literally Tether is smaller than it seems. And so this is quite interesting because this was shown by different various YouTube bloggers, and they actually have shown the same graph, the same chart I've shown to you before. And so let's talk about this a bit. So this is the market cap graph and market cap chart, and you can see that one of the points some of the bloggers were making, that actually the Tether market cap is slightly lagging in the last race on the price, slightly lagging behind the Bitcoin price. But actually, this is not very accurate because, as you can see on 3 months perspective, so the market cap, so the Tether started printing in April. So this is the growth, the start of the growth. This is April, and then you never know what was the reason of the growth of the market price. Was it this previous printing by Tether, or was it the other way around? So just saying that in this particular case, the price moved first, and then after that moved the market cap of Tether, might be not accurate, actually. So that's the first point. Then going back to Jesse Powell's interview. So if we think that his assumption that the price is driven by the retail demand is correct, and basically the Tether market cap grows just because of the demand, so after the Bitcoin price started to grow, then it has to be the same for other stable coins. So let's see on the stable coin number 2, which is USDC, and let's see what's going on with their market cap. Again, so they started printing in April, or early May, late April. At some point, they actually burned some of the coins. But let's see the difference. So if you look at this 3 months chart for Tether, so the initial market cap was 2,080,000,085 approximately, and in the end, that was 3,660.
Right.
They've printed about 75%.
Right.
Now, if you look at the USDC, so it's obviously smaller, but initially it was 256, and then it was 366. So basically, they've printed about 40%. So this is a big difference. So 75% versus 42 or something like that. So this sort of shows that this assumption might not be correct.
Right.
Because USDC doesn't show us the same pattern.
Yeah.
Now let's think for a moment about the following. So if you look at the fees, so this is the Tether fees here. So and 100,000 USD is the minimal size of the transfer you can send to get Tether. So obviously Tether is not for retail. So this is for large investors or institutional investors. Now, look, there is a fee per withdrawal and fee per deposit. So if you send basically less than 400,000, so your costs will be 1.1%. Then from 400,000 up to 1 million, this is a bit less than that. So it's 0.4, basically plus 0.1, which is 0.5. And if you try to withdraw more than 1 million, you pay 1. And if you want to withdraw more than 10 million, you pay 3%. So you immediately lose at least 1% when you send the money to Tether.
Right.
Whilst with the USDC, there are no fees at all. So the redeem, there's no fees, tokenization, no fees. Also, everybody knows that Tether has some problems. So if you look at the Tether website, the homepage, so it's backed, it is said that it's backed not just by cash, but also by some other assets. So loans made by Tether to third parties and so on, which may include affiliated entities. Everybody knows about the investigation ongoing against Tether and so on and so forth. So my question
is sorry to interrupt you, is a contradiction here, because it's saying every Tether is also one-to-one pegged to the dollar, but really what they're saying is pegged to the dollar and any other loans they have out or assets they have on their books. Right.
Of course, yeah. And then everybody knows about the problems with the audit, about the fact that they fired an auditor and so on and so forth. So the point I'm making is, why would anyone put the money to Tether? Well, you can put it to USDC if you want to put it on stablecoin. You can put it into USDC, which is backed by Goldman Sachs and venture investors, and it's much more reputable. And apart of that, you can there are various OTC brokers, there are funds, and so on and so forth. So if you want to buy Bitcoin for like large amount of US dollars, there are multiple options of how you do this. So why will you put the money to Tether?
Yeah, it doesn't make sense.
Doesn't make sense at all. So now there is one thing which makes sense, and this thing is the liquidity. Because obviously there is not as much liquidity with USDC as it is with USDT. And this goes to the second point of Jesse Powell, the point when he says that Tether is actually small. So this is actually reverse logic, because it is small if you compare the market cap of Bitcoin with the market cap of Tether.
Right.
The market cap of Tether is 3.5, while Bitcoin is about 200 billion. Obviously, it is small. But the thing is that the market cap is a derivative of the price.
Right.
So, and the price is the balance of supply and demand. And one of the ways how we can measure the supply and demand is the trading volume. So let's go to this one. This is very nice stuff. So it's Bitcoin markets on CoinMarketCap. And it's sorted by the percentage of the daily trading volume. Right. Now let's take, you see obviously that the biggest market is Bitcoin to Tether. Now if you add 10 biggest markets together percentage-wise, Tether and USD, and the biggest USD market is Coinbase Pro, obviously. Here it is. So if you add this percentage for 10 biggest Tether markets and 10 biggest USD markets, you will have 26.55% USDT and 4.77% USD. So the trading volumes for Tether is actually almost 6 times greater than trading volume for USD.
Yeah, definitely.
So this is sort of proxy to measuring the supply and demand.
Yeah, that definitely makes sense.
And obviously we know that some of the volumes are pumped, which is a topic for separate discussion. But however, so it's quite obvious that the Tether volume is greater than USD volume.
Definitely. I mean, this is like the smoking gun.
Yeah, and therefore Tether is not small at all in this market. So this is just not accurate.
So
now, yeah.
Sorry, go ahead.
Yeah. Just to summarize what we've just said, and also to show you some funny stuff. So there is a video which has been posted back December 2017 by a blogger with the name Bitfinex on YouTube, and this video actually shows the how Tether is traded against USD on Kraken. So you can see that every few, three in this case, sell orders, and then goes buy order for the amount, which is the sum of the amounts of this tree. And this goes on and on and on for almost 24 hours. So this is a perfect example of what's called wash trading. So I don't know why did it happen and what was behind that, but the point I'm making here is that even if it's a reputable exchange, and so everybody has sort of skeletons in their closets, and maybe that's why Kraken CEO actually tries to protect Tether even with the risk of his own reputation.
Well, can you explain the wash trading over here? That's really interesting, but I'm not sure I'm following 100%. Why does anyone benefit from wash trading here?
I don't know the real reason why they've done this. The explanation is it's just pump in the volume.
Yeah, because what it does is, yeah, exactly, it's pumping volume. So it's giving a false volume metric, but why anyone would be interested in doing that outside of Tether, I don't really know. It's really interesting.
Maybe, one of the assumptions can be that this is done to actually show to the market that there is a real market price of Tether, which is close to $1.
Right.
And there is a volume of trading, but in fact, there is no volume. And therefore, this market price, which is close to $1, can be not reflecting the actual supply and demand.
Yeah. And what's also interesting is that this video that you've brought up on your screen here was actually taken from the Kraken platform. The price is really largely driven by Tether.
Yeah, but no, I believe that there is an influx of fiat currency. Why not? But the point I'm making that the real reason of the bull run, we don't know, and we don't know to which extent the fiat currency influenced that, or was it Tether printing, and the volume shows the latter.
Yeah,
that's the point.
Yeah, that's the takeaway, and it brings us back to the same takeaway as the last video, which is perhaps expect some kind of correction at some point, because like you said, there are skeletons in closets. You showed the Tether homepage as well. So technically, just going to the very root of it all, what backs up Tether is not actually dollars. It's not 100% US dollar currency. It's other factors as well, or assets on Tether's books, which is a little bit like if you think about the 2008 subprime mortgages. Who's to say that the debt that is owed to Tether, that Tether might be using to back against creating more Tether, who's to say that debt is any good?
No. Moreover, it can be debt to the third parties, which may include affiliated. Yeah. And debt to affiliated parties is always bad, because it's not sort of market loan or something like that. It can be anything.
Yeah. I mean, for me, there's just an inherent flaw there. We mentioned the whole point in the past about, well, if you're going to have a stable coin, why have it against fiat currency? Why have it against the US dollar? Why not have it against gold or anything other than a fiat currency? And I think this proves that, because I think Tether initially started out doing a 1-for-1, every Tether is backed by $1, right? That's initially how they started out. But for some reason, they haven't been able to stick to that.
Yeah, that's probably because of the problems with the banks and some other stuff. You never know because nobody knows the details except themselves.
And therefore, coming back to your point, we don't really know anyway. Even, if I take away the numbers and all the evidence you showed, even from a fundamental point of view, we actually don't really know what's driving the price movement in the market. And so for the traders out there, I mean, I go back to what we spoke about last time, which is there has to be a correction for this at some point. We can't say when, but to me, there just has to be. And I think we might have alluded to, it could be something like a 10 to 20% move, maybe as a correction. I just wonder if we're going to see that in the short term, or if it's going to take years for this to come to light,
Yeah, we've seen this already. So there was a correction from almost 14,000 back to almost 9.
Yeah.
Yeah,
but the reason behind the correction is, like, for example, the audits that happened with Tether, how credible are the audits that are happening? Because from what I've read online, it's sketchy.
Well, the thing is that even if it's totally good and credible audits, they are done from time to time.
Right.
They're done like once in a quarter.
Right.
But actually, it's more rare. So it's once a year or once in half a year, something like that. And therefore, even if the audits are fine and there is a reputable auditor, and the auditor confirms that the bank account contains the amount of dollars equal to the amount of tokens issued on the blockchain, but what happens in between? Because nobody can control the bank account. So unless the bank publishes the balance, which is not probably possible at this point, then nobody can control this. That's the problem.
So where do you think that Jesse Powell's comments are coming from? What sort of place are they coming from, really? There is it just that he's probably not as informed in terms of some of the analytics you've shown us here? Is it?
Well, I think he's one of the most informed people in the industry.
Right.
So it's just probably sort of trying to look good and trying to avoid different rumors.
Trying to avoid the skeletons.
But in the industry generally. So maybe that's the reason. So he tries to pretend that the industry is cleaner than it is.
Right.
Because obviously his success depends on the industry heavily.
No, well, Dmitry, thank you for covering that as usual. It's always so insightful to go deep inside your brain into everything that you've got your attention on in the crypto space. Look out for more videos on that as well. And Dmitry, thanks for covering Tether here again.
Thank you.